Well, thank you very much for this very kind introduction. Welcome from my side to this panel. We will talk about tokenized securities from issuance to settlements. If you've seen the agenda, we're yet lacking one panelist, but that panelist is given an extra friendly intro in hopefully just a few minutes. So we'll pretend we're complete, and at some point we'll be actually complete, and we're not going to waste everybody's time. So welcome, and let's get started. Now, I think we start at the back this time. Adrian, you can have your water in a bit. Why don't you give the audience quickly who you are? I've learned this is one of your very first moments in Frankfurt, so just a bit of your background and what you bring in the space.
It is my first time in Frankfurt, and it's going very well, so thank you for having me. I'm Adrian White. I'm a director of digital assets in Santander's corporate and investment bank, and we've been working on blockchain and digital assets really since 2015. It's been a big bet for us. We still see the value in it. We think it's going to bring a lot of value to our clients and to ourselves. We work across the full spectrum of digital assets, so digital securities. We did our first tokenized bond in 2019 on the public Ethereum blockchain network. We since have been involved in the European Investment Bank bonds as joint lead manager. In some cases, one of them was obviously France, Luxembourg. There's been central bank digital currency involved in one of those. We also are doing a lot of exploration on collateral mobility and programmable collateral mobility. We see a lot of opportunity in, let's say, hi Matt, welcome. We see a lot of opportunity in tokenized repos and securities lending. We also have a lot of focus on digital cash. We're founding members of the Finality International, the entity, and we're looking forward to, let's say, progressing that moving forward. We've been involved with other, let's say, initiatives and exploration on digital cash that is not Finality. And we also have other crypto assets in specific jurisdictions for specific clients. So we're live with Bitcoin, Ethereum trading, execution, and custody in Switzerland. So great to be here and looking forward to the dialogue today.
Thank you, Adrian. Quite an impressive range across the different aspects. Ben.
Yeah, Benjamin Duve. I work for the European Central Bank. I don't know, I don't have to make an advertisement who we are, I assume. My role there is to bring an industry perspective, and some of you guys know me from other roles from before, bring an industry perspective and help develop what could be a potential future for capital markets with a DLT angle. And we're currently in a listening mode to understand from the industry what is needed, what is the view of the industry, where do we want to go, and that's why an event like this is very interesting to follow, to see where the current use cases are, and we're doing quite some extensive work right now in Europe, but also to understand where does it go in the transition in 5 years, in 10 years. And the reason I think I'm quite passionate about the topic, I ran a custody business many years ago at Commerzbank, looking at tokenization already 6-7 years ago, then moved to a global custodian, BNY. So also looked at that global perspective, and it's quite nice to be able to be in a place like the central bank to really influence and hope to help find the right solution for a capital market in a DLT setting.
Thank you, Ben. I think that's going to be part of our discussion later on what type of influences will be coming. Wayne, another guest from Madrid. So we have what makes me extremely happy, a very international panel today. So Wayne, please introduce yourself.
Yeah, hi everyone. So Wayne Hughes. I'm in charge of blockchain and digital assets for security services of BNP Paribas. So on our side, I'd say a lot's going to be similar to what you heard from Santander. Our focus right now is really on experimentation, mainly in a live environment. Not yet launching products. We don't see our clients yet knocking down the door asking for products, but wanting to have a first experience, and especially something that they can use to start engaging their organization and start learning what this means for them, what this means for the industry. And as far as areas of focus, we've been involved in a number of the digital bond issuances here in Europe. Also have a big focus on the tokenization of fund shares. And then I think common to everyone right now, big focus on cash, especially, quite excited about the ECB trials, and very active in that area right now.
Matt, welcome to this panel.
Thank you.
Would you briefly just introduce yourself and what is your role and what's in the issuance part or settlement part, what you've done?
Yeah, sure. So I'm Mathew McDermott. I head the digital asset business for Goldman Sachs. I would say kind of keeping it real in terms of what we do. Big focus really for us is moving on from kind of experiments, POCs, really trying to extract where the commercial value is. So as we look at kind of tokenizing different asset classes, I think I've spoken on this panel before about some of the stuff we've done. We've got our own digital asset platform. We've been involved in bond issuances. We've got a number of different things that we're looking to kind of bring to market this year. Collateral mobility, some of the stuff we do with JP and looking to do elsewhere as well, is something that I think as that starts to scale, you'll see real commercial value across the market, and that's something that's kind of live and real. Also very active, not being able to touch the public blockchains, but very active on the crypto side. We actively kind of have derivatives, options, all that good stuff, but secured lending is something that we're seeing obviously a bit more appetite across the market. And we've invested in a number of companies, so we're very actively involved with all of those as well.
Thank you. And Christoph.
Katharina, thank you. Christoph Hock, Head of Tokenization and Digital Assets at Union Investment. So we are on the blockchain DLT journey for about 10 years now in the meantime. I started my role as Head of Trading at Union. This was back in 2014. A year later, I was hosting a workshop on blockchain, and I guess I could motivate a total of 5 portfolio managers to join. So at this point of time, definitely not a key theme having a similar workshop today. I guess we easily could have 150 plus attendances, so lots has changed in the meantime. I guess most important for us is really to create within the firm, and that's what we were working on for the last 5 years, a sense of urgency related to token economy. Definitely a topic, as we discussed before here, which won't disappear. Game changer for the financial industry, and therefore I guess it's really key as an asset manager in the very best interest of our end investor, of our clients, to be on this topic. Number of use cases we've had in the past. We were involved in a number of tokenized bonds. First one started back in 21 with an EIB issuance. Currently in discussion with a number of issuers about big projects to be launched in 24. Derivatives is also a key theme for us, so not only the cash side, but also replicating derivative products, interest rate swaps via smart contracts. That's also an asset class where we see significant benefits. And going forward, it's not only about tokenizing traditional assets, but coming with new products to our investors. So tokenization is much more than a copy-paste of the traditional financial industry.
When we look at all the different things that you've already done, right? I hear a lot of we've tried this, we've stepped into this and we've looked at that. Now I think the one key question that I would also bring to this rather sophisticated audience, where we don't need to talk about the general possibilities, the general observations, the general. When you need to pin it down to the one critical aspect that at this point in time, second quarter 2024 matters in terms of pathing further the way for transforming, and also, and we can cover that in a second question, but also keeping in mind, it needs to have a commercial value, just as you point out, right? We've been too long in the game of hope, I like to say, and at some point there's a triple net question. So when you pick that, what's the most critical aspect in a specific use case that you can talk about that you are focusing right now in your daily work, where you say that's something we need to solve right now?
Yeah, I can certainly start with my 2 cents. So, I mean, for me, it's all about kind of liquidity. And again, it's something that I've kind of repeatedly said, because without liquidity, you don't get scale, and then you don't create the market. And once you create the market, the custodians come, then that kind of broadens your investor base. And so from my perspective, really it's about kind of attracting that kind of liquidity and doing and being involved in whatever form, be it the EU pilot or in different projects where you can actually deliver that.
And let's just follow up on that, because then, Adrian, you'll get your point. Liquidity comes either from the offering or from, obviously, the participant market. So where do you think we need the bigger push at this point in time? Is it the education on the buy side, or is it just the proactive management on the sell side? Where would you put the leverage on?
Keeping it real. I mean, I just come back to kind of the issuance we've done in Europe. I mean, that was native to the blockchain. There was no CSD involved. So even though the instrument, I think, was listed, we could have OTC trading, reverse inquiry, but you couldn't have a bona fide secondary market because it kind of fell foul of CSDR. So there's a very clear example where you've got like this huge swathe of the buy side, very keen to invest, but not having the ability to do so. And so if there's no liquidity, they're not going to invest. And we see that manifest itself in many different things that we look at. If you enter into the EU pilot, the intention would be that you could create that bona fide liquidity. You could have both the trading and settlement on the same platform. And that becomes very powerful, because I think, and I was going to talk about this in a bit, but BlackRock have had a pretty profound impact on the way the market is now looking at this space. HSBC's CEO came out the weekend, talking hugely and very positively about tokenization. But the point is, there is no lack of interest. It's creating the environment that's analogous to where we trade today, where there is secondary liquidity. And I think, a lot of people talk about tokenizing money market funds. I've been in a lot of conferences recently on that. And again, you've got an instrument there where it's not transferable. There's no liquidity. You tokenize it, you create a slightly different marketplace. And then there are things that you can do that actually can create value. You can use it as collateral. So these are real, proper use cases.
Okay, let's park that for a moment. I think it's a super interesting aspect, but I want to give Adrian, who was the first one to put up the micro, actually.
Oh, no, that's okay. I mean, I agree with the points made. I think, blockchain and DLT in a way has kind of had its day in the sun. We've all made our pitch about how fantastic it is, and I think I would say everyone in the room here agrees where we're going to be in 10 years' time. The unfortunate reality is we've got to get there, and we've got this middle ground now where we've got to prove business case, we've got to prove to clients that it's valuable. And I sometimes have a anecdotal joke where if you rang your buy-side client and you said like, hey, you know what, we're moving to the cloud, and they go, that's great, I don't really care. And they need to care about tokenized. It needs to be better for them in some way, or it needs to be cheaper, it needs to provide some benefit. So while we'll all agree on the ultimate end game, I think we've got to start showing the benefits and the access point in the medium term. And I think, okay, so liquidity, absolutely important. The CSDR obviously holding us back in a certain sense. I'll add something maybe that wasn't said. I think more custodians, that might open the door to the buy side. So global custodians getting involved, and for us to find creative ways for that to happen and to move the needle, that'd be a good point. But in general, building a secondary market is absolutely key in the next, let's say, 3 to 5 years, while we're not yet at the end game. I think the next kind of period that we're about to go into, one good thing is that everyone is tokenizing. So that wasn't the case before. Everyone is kind of experimenting in some way. But it's going to be a little bit messy for a while. There's going to be a lot of activity, and maybe it won't be what we finally end up with. But we've got to get through that. So making it as accessible as possible to the different participants, whether that's buy side, custodians, whatever it might be, I think that's where we're just heading into now in 2024.
Okay, so we'll duly noted liquidity, duly noted custodian offering. Wayne, what's your perspective on what's the critical aspect right now?
Yeah, so definitely agree on what's been said, but maybe a little bit different angle. It goes back to what you said. I think what's sort of missing right now is really a compelling short-term business case. As you said, all of us have this vision of what's going to happen in 10 years, but none of us are really working on what's going to happen in 10 years. No, we're working on what's going to happen this year. And I think we really need something that you would move the priority given to these digital asset initiatives. I think right now, if we look at our client base, they're just completely overloaded with all sorts of initiatives on their plate. And even if they recognize that this is important for the future, it's not getting to the top of the priority list. So I think we really need something that motivates them to move sooner rather than later. One of my colleagues expressed it in a way I think, in a good way, which is we need a business case which is 10 times better than today, not 10% better than today. And a lot of the use cases that we've started with, which were good ones to start with, simple use cases, are really 10% better, not 10 times better.
Thank you. I'll pick the 10x case on the list, but first we'll give Christoph his perspective on the most critical aspect, and then I'm going to try to summarize and put out the next question based on, let's take a different hypothesis, but you go first.
Katharina, thank you. In your introduction, you mentioned one extremely important term, and that's education. I think one of the big problems we have right now when focusing on token economy is you have expert groups, you have specialists on this topic, but the breadth of the employees doesn't really focus on token economy, doesn't focus on blockchain DLT as of now. And I think this comes prior to liquidity, secondary market trading, DLT pilot, sandbox is a key topic. We discussed wholesale central bank money, which is key. We discussed regulation, but from our perspective, first comes education, and that's in combination with visionary thought. Where do we want to go to in 5 to 10 years' time? We are currently said in a previous panel in the privileged situation to build an ecosystem, to reshape the financial industry, to deliver a new technology in 5-10 years' time. We won't discuss anymore, is it crypto-based? Is it partially traditional-based? Crypto will be embedded in the entire financial ecosystem. And that's, I guess, where all of us, we have to do a better job. We have to train, we have to educate our employees in-house. We have to collaborate with all the various stakeholders, from regulators, central banks, politicians, buy-side, sell-side firms, vendors. And I guess this has to come first. And looking at visionary thoughts, asking the question, where's my business case in 6 to 12 months? I think when looking at all the client benefits in 5 to 10 years' time, no one really will ask, do we monetize in 6 months' time? Do we monetize in the business case in 12 months' time? Looking at social media, just take Facebook as an example. When Facebook went public, first listing on New York Stock Exchange, within the first month, the stock was collapsing by 30-40%. No one had an idea what is in the business model of these guys. It's a great platform, but how do they monetize it? And I guess even Zuckerberg at this point of time didn't really know. And then out of a sudden, advertisement came into Facebook, and today it's $1 trillion company. And that's my key message here in terms of sense of urgency, and that's highly required also from a C-type level, not asking, can we make money with blockchain technology in 6 months, but how do we position our company with a focus on what's best for the client to be ready for the next 5 to 10 years. And that's, I think, the key question we have to ask ourselves.
Ben, I will actually frame a question for you. You said you want to listen to the market, so you've now heard for credible market players talking about liquidity, talking about custodial offerings, talking about 10x, and then but also talk about taking a long-term investment view. In the end, it's a competitive landscape with competing perspectives. But what's the focus from a central bank perspective? What are you trying to create as an environment? What is your focus?
So I think important is everybody talks about 5 to 10 years. We would really love to understand what everyone means in detail about those 5 to 10 years, because I think if we sit down and spend an hour or two, those 5 to 10 years, the outcome in the end looks quite different. I think that's a very important input for us as to get from the industry, right, to understand what you guys mean by that outlook, and then what you expect from a central bank to do. I mean, I just heard central bank money, one of the components, but how, right? And I think those are components. And if you look at what's important from the central bank perspective, I think first off, I always want to make this little advertisement. I'm quite new, so I can't take credit. But if you look at what the exploration we're doing right now in Europe is, it's the largest application of DLT technology in a significant manner in capital markets. And it's used by many different players. It's actual central bank money, it's actual settlement, and we have two waves. So I think it's a very significant innovation step the central bank is supporting, and it's not the central bank, it's actually the Euro system. That's very important. It's not one central bank, but several central banks providing the solutions, a central bank participating, and the Euro system central banks actually helping us in that way. I think it's one of the components to provide central bank money, right? There's central bank money in the way we do it now. You have a DLT, we have a DLT or an ecosystem that connects to your DLT, and we will help you settle your asset. It's your asset chain. There is a model where you could argue or central bank money goes on somebody else's chain, right? That's another model you could suggest that's possible. Or there's an integrated model where you say, wait, DLT could be of an advantage when the asset and the cash sits on the same chain or is in the same ecosystem. Is that the way it should play out? And I think we have all of those different versions. One we're testing, super innovative, I think ahead of the curve if you compare it globally. Interesting for us is to understand from the industry, what's your 5 to 10 year view? How can we help on that path? What you expect from your central bank, right? And there are already 3 models out there, and who knows, maybe there are more nuances to that than we know right now, but that's very important for us to engage in that discussion.
Can I just quickly kind of comment on a couple of points? One, on the education, I actually don't totally agree, because I actually think, I mean, you said at the beginning you've been in this space for 10 years. I mean, that's 10 years of educating yourself, ourselves, but also other people. And I actually, just taking the central bank and taking many other regulators across the globe, their knowledge has moved on exponentially. And so there is a very good, solid knowledge base there that exists. So across the market, there's a lot of practitioners that I've been engaging with for kind of a good few years who have, very senior roles within their institutions, and they have been making progress. And I think really, the 5 to 10 year vision is great, but most institutions aren't going to wait to see something positive commercially come through in that timescale. And we know the technology works, I think to the point that was made earlier. It's now trying to be clear on the use cases and actually thinking through kind of intelligently what commercially works. And there are just certain things, that just don't. And so that's where I think you have to pivot and really focus on those. And they do exist. That's, like I say, going back to kind of what I said at the beginning, there is real commercial opportunity there, but you need scale. And the scale gives you the opportunity. Liquidity, capital are expensive. They're becoming more expensive. When you look at the rules that kind of meandering down to impact banks, there is a great opportunity there. So I don't think you need to think that long, but digital money, that is not something that's going to happen overnight. We all appreciate that. And for me, digital money needs to be ubiquitous, scalable, and have the right kind of capital features, and a wholesale CBDC or something of that nature is what you need, and that's probably 3+ years away at a minimum.
Yes, I think that's a point that is worth just digging into a bit more, because in the end, we all have clients, and the clients need us to create value. No matter what technology, no matter when, at this point in time, we all need to create our income and just generate value for the clients. Now, when you look at the short-term business case, as you put it, oftentimes there's an angle where you discuss cost. There's technology, it's supposed to be more secure, it's supposed to be scalable, it's supposed to leave out intermediaries, there's supposed to be a cost angle. If you look at that, what's the parameters that you see right now in the pitches? Is it the cost side? Is it an additional feature? Because as you said, tokenized securities can do more than traditional securities. What's the pitch right now?
Yeah, well, I just maybe comment back on Ben's question about what we expect from the future. I think what at least what I'm expecting to realize is the full benefits of programmable money and cross-border, cross-currency settlement. So they're the kind of two key ones if you want to pick them or keep it simple. I think that's what we expect, and we'll be delighted that regulators come on that journey with us, which is the way we've now started, and that's fantastic. In terms of cost, I think over the last maybe 3-4 year period, we've done a lot of one-off experiments proving what could be possible and what could be done, and we're trying to move the needle in every single one-off scenario. I think that time is now over, and they've been costly, right? They're costly for everyone who participates, but we've proved something, and we've hopefully brought kind of, rising tide raises all ships. We've hopefully brought that direction forward. Now, as I think Matt says, we've got to really zoom in on we've got to make it a cookie cutter, but we've got to get a little bit closer to something that's standardized and that we can do kind of in a factory model. Because if we don't, then the legal costs and everything involved with this one-off scenario is just going to continue. So I think now's the time where we've moved out of POCs, pilots and experiments and one-offs, and now we've got to move into the realistic business models. And as Matt says, that's not going to be for everything. Some of them are going to go by the wayside, and that's fine too. But it can't be one-off anymore. It's got to be something that's repeatable. And I think that's what we're focusing on now for the next, short term, the next few years anyway. That's where our focus is.
And I guess that's what you already see when looking, for example, at tokenized bonds. About 1-2 years ago, you've had a handful of issuances during the course of the year. Now looking just at 24, you've had in Hong Kong 750 million Hong Kong dollar issuance. You have here in Europe with the expiration phase of the ECB kicking in now, beginning of May. You will see handfuls of bonds being launched. So it's getting more and more standardized. And at the end, it's about the combination. So you have issuers feeling more comfortable coming with paper to the market, buy side, hopefully having a broader pickup than we've seen it in the past. The element Matt mentioned with the DLT pilot regime, hopefully in H2, we see the first licenses being granted. So you then can trade these products not only in the OTC market, but you have an MTF trading, which is extremely important. In the UK, you have the sandboxing, where most likely by the end of the year, we see the first entrances from trading platforms. So there's really massive momentum kicking in. And what's also highly important, regulation. And we have here in Europe tremendous regulatory framework with a MiCA for traditional tokenized securities. We have the DLT pilot regime. So everything in place from a governance. So all the ingredients are there. It's just a pickup by the industry, which is
what's stopping you? Right, I think that's the question that's interesting to understand. What's stopping the mass adoption, and are there pieces still missing? Because I understand discussions I had, and I think Matt, right, I think all the discussions I had, and I just had recently discussion with someone. I said, I had a discussion about some tokenization, or it's real world asset, I think they called it. And I said, well, that's the same discussion we had 3 years ago. It was called tokenization, right? And I think we had the discussions, what's missing? And now I'm luckily somewhere where people are willing to listen, to understand how can some of those cornerstones potentially be addressed to help this move forward. And I think it's a European opportunity as well, right? Because we have the regulation, we have the different players who are used to it. You have the C-suite buy-in already because they know these topics, they have been around for years. And I think that's the important thing. So where's the future? But maybe I should add, how to transition is something very interesting to us as well, if there's something we can help with.
So, yeah, maybe just quickly. I think what is true is a lot of the missing pieces of the puzzle, now we're seeing them move in the right direction, and that's including cash on chain. But if I was going to highlight one thing that I think is still a big challenge out there, it's really the fragmentation. There was a mention, I think, in one of the previous panels about islands, so kind of everyone doing their own thing, which, to say the truth, I think was the right way to start. It was a much easier way to start. But, going back to the point about scaling this up, doesn't scale, no? So at least in our mind, one of the key topics for this year, key focus, is really collaboration. So how can we work together as an industry on common initiatives, on standards, and we believe that's really one of the keys to kind of take that next step and have some possibilities for scalability.
Yeah, the only thing I'd add over and above to your question, I think if you've looked over the last 2 or 3 years, there's been probably quite a kind of fractional adoption across the sell side and some of the buy side. And it goes back to kind of the momentum we've seen, again, just, I guess, blowing smoke up BlackRock, but that they've had a pretty profound impact. And you've seen now an acceleration across the sell side in terms of focus. And that means they need to onboard onto platforms and things like that. So this all takes time, but you're slowly seeing a greater kind of adoption. Similarly, on the buy side, there's this question, what are we missing? So you've seen an increased cadence there. And then on the FMIs, I mean, we all know that there's kind of, there is this existential threat, so there's a big focus there. So I think you've seen kind of just more of the market really kind of start to invest and really kind of dedicate time and energy and resources to this space. And then the other thing, to your point, is on the regulation. I mean, you can't enter the EU pilot, right? So you've got to wait for that time. Once you can, things can start to move forward. So it's frustrating because we all want it to move quicker, but, you've got to be patient and make sure you do it right.
Now, I can't believe it. We're closing in on the panel, so let's wrap up with, you can choose one of the 2 questions. If you could choose between having cash on chain, right, and having offerings on chain, right? Are we lacking tokenized fund shares, equities, bonds? Or are we lacking the efficiency, i.e. the cost side, with actually delivery versus payment and having securities and cash on chain? If you were, need to pick, which one would you take and why?
Again, I come with my visionary view, Katharina. So at the end, what is it, what's from a client perspective, we are heading to, we will see 24/7 trading. We will see atomic settlement. The client will have at the end one combined wallet with cash and with assets, where like PayPal, you can have instantaneous payment. Therefore, cash on chain is really a key element. And
okay, but I would have actually understood you that you would come from the pull side, so the offering. But you say it's cash. That's the immediate first pick.
Which in the long run, cash is the key element. In the short term, it's assets on chain.
Okay.
Given I'm in Germany and they've got the trigger solution, I'll consider that cash off chain. So I think you can have your cake and eat it. So I'll go asset side.
Love that humor. Wayne?
Yeah, maybe a different way to answer. I think we need a widely adapted means of payment for institutional activity, for blockchain-based activity, whether that's on-chain or off-chain, whatever. But
you are such a diplomat, Wayne. Ben?
It gets even better. I'm just here to listen and understand what the industry thinks. And that's an important message. We're in a listening mode, and we want to understand what is needed and how a central bank potentially can facilitate.
I'm going to refuse to split them. I think the DVP is something that we've all been talking about for a long time. The atomic settlement is super important. We need that. We're not in the position where we need to start picking and choosing. We need to bring the two together. Obviously, digital cash, I mean, it looks like it's getting closer and closer now. We've got, 2 or 3 models that really could viably work, the ones that you've listed, and I hope that we get there. So the missing piece maybe, and needs to come up in terms of energy and investment, is the digital cash side. But I'm going to refuse to split them and say our DVP is the thing I'm holding out for. So I think they're both super important.
Gentlemen, I kindly thank you for your points and coming here to Frankfurt today. If I wrap up from my perspective, I know we all feel like we've been talking about certain things for a long time, but also in reminiscence of Philip, we've been talking about many things, but sometimes if you zoom out, we have made progress, right? We're now talking about specific diversified use cases. Of course, there's still the liquidity question. Of course, there's still, custodial questions. But if we look at the panel today, just the personalities combined here, I think it is important to recognize that with MiCA coming, with the pilot regime, with the trials, there is this momentum, and I'm sure the commercial short-term business case will be on top of our minds still, but I think it's exactly that balance between continuing every day, making the next step, and keeping the 5 to 10 year vision in place, and still, convincing internally, externally our stakeholders to just, follow that path. Thank you very much, and thank you to the audience.